Hi, I'm Jim Jubak, and this is my YouTube video for the 29th. What do you know? It's not May Day, it's not April Fool's Day, it's just the 29th of April. It's warm here in New York, so I've changed out of my Patagonia fleece to my Jimmy's t-shirt. Jimmy's is a great Italian food emporium in Dallas. Love their sausage. If you want to see more of me, my regular site is jubakpicks.com. It's free. I run 3 portfolios, do stock picks, do market analysis, etc., big picture stuff, small picture stuff. My subscription site is jubakam.com. That has 6 portfolios. We do some options there, do some more ETFs. Recently started a long-term portfolio for millennial investors. Don't forget to like and subscribe. Subscribe to my YouTube channel and you get a notification of when new videos go up. We're doing about 1 a week. Okay, so today's title is 3 ad picks that aren't Google or Facebook. And the reason for doing that is because Google and Facebook have just recently announced blowout earnings. They just whipped through those Wall Street estimates like crazy. And the big driver of the upside surprise in both of them were ad sales. So if we take a look at Google, for example, or Alphabet as it's known to its friends, its big driver in the quarter was YouTube revenue from this kind of stuff. Ad revenue for YouTube videos was up 49% year over year. Now, not terribly surprising, YouTube has about 2 billion, that's with a B, monthly users who watch 1 billion hours of video every day. I don't know who you slackers are who aren't watching enough video, but go out and do some more. Obviously, YouTube needs you because it's only getting 1 billion hours of view a day. If you put this in context for inside Alphabet Google, cloud computing, where Google is like number 3 behind Amazon and Microsoft, revenue there, which has been growing really fast, really driven the stock price higher, well, revenue there was up only 46% year to year. So ad revenue actually at 49% growth beat the big cloud revenue driver. Okay, if we then look at Facebook, what we saw is total ad revenue at Facebook grew 46% year over year. Now, I'm not quite as impressed with that number as I am with Google's number, and let me explain why. Facebook got that 46% year to year growth out of a 30% increase in the average price per ad and only a 12% increase in ad impressions. What you're seeing there is the fact that when a advertising marketplace gets to be something that people have to own, the owner of that advertising marketplace can raise prices. So, you have to advertise on Facebook. A lot of companies believe that. So Facebook's got the ability to raise prices. One of the things that's interesting about that to me is if you go back to Google Alphabet and you say, well, YouTube doesn't quite have the advertising mind share that, say, a Facebook does, which means that Google's ability to raise prices for YouTube ads, I think, is a lot more ahead of it than it is for, say, Facebook, where people already know about that platform and believe they have to own it. Okay, so if you like, the takeaway that I get from that is that we're seeing a huge surge in ad revenue. Most of it is coming at this point online, digital, because we're coming out of the pandemic and this is the first quarter, so we're looking basically from March back to the beginning of the year. But that we're seeing ad revenue go up, and I'd like to own ad stocks where there's more of the upside ahead of them. So let's look at some charts. Okay, so here we've got Google, and this is a year-to-date chart, and you see Google stock has really taken off recently. It's probably the best performing, or one of the best performing stocks in the FANG group of Facebook, Apple, Netflix, Google. Anyway, so that's what Alphabet looks like. If you then look at Facebook, you see that you get this huge spike recently because Facebook has been kind of depressed because people have been saying, well, you know, they've got X problem, Y problem. They're looking at antitrust issues. Mark Zuckerberg is not sometimes the best CEO for the stock price. So the stock has been there's been a lot of negative sentiment, but that's been overwhelmed recently by the results out of Facebook. Okay, but one of the stocks that I want to look at beyond Facebook and Alphabet, because I think there's more ad revenue growth that's not just digital, and that these companies, these three picks that I'm going to give you today, participate in that. First is Omnicom, which is it's the second largest player in the ad space by revenue. And what you're seeing here is that they announced first quarter earnings recently, and basically what they said is, you know, we got some growth. We returned to positive growth in the first quarter, but we're really looking at growth to pick up in the second quarter and for the full year, and that's what you're starting to see here pick up. And I think if you're looking at the stock to go higher from here, this is a good stock to play for the rest of the year. It has an advantage over some of its peers that it pays a pretty hefty dividend, about 3.4% right now. So stock is not up tremendously this year, but it's up strongly this year because there's a lot of momentum. You get some dividend. This would be my favorite pick in the sector. Already own some in Jubak picks. Okay, second is a stock that's where it's easy to remember the ticker because the ticker is the name of the company. It's WPP. Now, this is the largest player by revenue in the ad space. The thing that I like about it is that it's really big in the UK and the European Union markets. Now, why I like that is because those markets have been pretty depressed in terms of economies. That they're lagging, their recovery looks like it's lagging the US. So you've got even more future ahead of you in this stock than you do for something like Omnicom, where you've got, it's a global stock, but you've got a lot more emphasis in the US than WPP does. In contrast, or the one thing that makes this slightly less positive for me in terms of the whole year is that this doesn't pay quite as much of a dividend, but it does pay a pretty hefty dividend for this time and place. It's about 1.9%. Okay, last in the group is if you want your technology, but you want it really in advertising. It's a company called Trade Desk. Ticker is TTD. Pays no dividend. It has not been doing all that well in 2021. You can see this huge drop here. But what they do is they run a cloud-based platform that enables ad buyers to analyze, optimize their digital ad campaigns across display, video, audio, in-app, social media. So essentially they're a tool to do this. And they go out and get clients and sign them up for their platform and move it ahead. Now the stock is not up in 2021. It's in fact down about 6.8% for the year to date, but it had a huge run up over the last year, back in 2020, and I think that's one of the reasons why you see this drop. So we've established, I think, a decent bottom in around here and here. So that I think we're now looking at the ability of the stock to move up. I mean, we had a big down. I mean, this is a classic chart. Down, down, down. Each high is lower than the previous high, down. Here we haven't yet taken out any of these highs, but at least this one was higher than this one. We're now above this high. So it looks like the pattern here if you're looking at simply looking at a chart, has started to turn positive. And this would be a stock that I, again, would look forward to having a pretty good 2021. It's a continuation of a theme that I've been talking about for a while. I'm looking for stocks that will participate in the big growth rebound in the U.S. economy that we're going to see in the first and the second and maybe into the third quarter of 2021. I've talked about things like theme park stocks like Disney and Six Flags. Another one to look at there is Cedar Fair. Symbol there is FUN, which has another set of theme parks, not as high visibility, but the whole idea there is more people going, as the economy reopens, more people going to that. You can look at restaurant stocks. Advertising stocks are one of the clearest ways to play this. It looks like that the U.S. economy is going to grow at 6 to 7% in 2021 as it comes off the real bottom, and that's what we're looking to participate in right here. If you like this video, please like it. If you could sign up for my YouTube channel, please do that. That way you get notices. And of course, read me on jubakpicks.com or subscribe and pay me to read more of me because Jubak Picks is free on jubakam.com. Okay, thanks very much, and I'll talk to you in a week.